Good morning, everybody. Welcome to today's edition of Toggle's Daily Video Insights. Today, we're going to take a look at why SAP could rise 4% in the short term within the next couple of weeks to a month and what the drivers behind this are. As you can see here, the Toggle has actually generated and highlighted some positive drivers for SAP going back as far as April and May. And most recently, definitely heralded that there could be some big moves ahead, which recently with this move up to 150.20 had actually come to be. Now, let's take a look at this latest insight here, which is suggesting that we could see another 4% move up. As you already know, the projection is suggesting, based on historical analogs, that you could move from 149.60 to 155.77 if, in fact, the technical analysis indicators and history do repeat themselves. Encouragingly, there have been 22 similar occasions that Toggle was able to analyze. So there's quite a good number of data points that Toggle was able to look through and analyze and see whether or not this was a robust relationship. Now, why might it move? Let's take a look at in more detail the drivers. So basically, what you can see here is a combination of relatively good thrust in the stock. That happens when you've had a string of positive days for a particular stock. There's an element of thrust that Toggle is able to look back on and see, okay, previously when the stock moves up in such a forceful way, has that meant anything for an extension? Similarly, this has been also combined with a relatively bullish configuration for the stochastic KD spread. Again, this is something that probably, unless you're a technical analyst, you're not paying that much attention. But if you just look at all of these episodes that Toggle has highlighted, you can kind of see that actually there really was a certain convexity to this payoff profile, because it coincided mostly with moves up or extensions of already ongoing rallies, and very rarely with a move down. A better way to see this is we can look at past performance, and you can see the green dots are all of these positive returns in those past 22 episodes, and red ones are when actually things did not go as planned and the stock actually continued to decline. But look, importantly, the ratio is that at a minimum, it seems like you were effectively looking returns between 5 and 10%, potentially more. And on the downside is between 0 to 5%, so 2 to 1 kind of risk, which is the sort of one-sided risk that Toggle likes to highlight when it identifies particular drivers. This is as much as we're going to cover for SAP today in the daily brief. We also talked about the bank earnings and what has been driving them. So for all of you who subscribe to the daily brief, it should already be in your mailboxes. For those who don't, go to toggle.global. You can sign up there and also test drive Toggle Copilot. If you'd like to see more of these videos like this one, or subscribe to our YouTube channel, we do them every market trading day. The goal for us here at Toggle really is to develop a system that can help you break down the barrier between the vast amount of data that we know exists out there and your ability to actually use it and use it to your advantage for identifying investment opportunities, or potentially also avoid dangerous situations in your portfolio. Thank you for your attention, and we'll see you again tomorrow.